Nobody tells you that financial collapse doesn't announce itself. It doesn't arrive with a letter in the mail or a sudden crisis or a single catastrophic decision. It begins in the ordinary rhythm of a Tuesday, in a transaction so small you wouldn't think to mention it to anyone, in a habit so familiar it no longer feels like a choice at all. And here is the uncomfortable thing that most people never fully sit with. The banks already know this. They have known it for longer than any of us have been managing money. They have studied it, modeled it, built entire systems around it, not to protect you from it, but to remain indispensable to you because of it. Most people believe that financial failure comes from recklessness, from spending too much, saving too little, or making a catastrophic mistake they should have seen coming. But that belief itself is part of the design, because it keeps your attention fixed on dramatic, visible moments, while the real erosion happens quietly, slowly, in plain sight, in behavior that feels responsible. What you are about to hear is not a warning, and it is not a prescription. It is an observation, a slow walk through the architecture of a system most people live inside without ever quite seeing. If anything unsettles you in the next 30 minutes, that discomfort is worth staying with, because it means something you already knew is beginning to become visible. Picture a morning, not a dramatic one, an ordinary Wednesday. You wake up slightly before your alarm, which means the first thing you do is reach for your phone. Not to call anyone, not to check the news, just to check. And somewhere in that checking, a number appears. A balance, a pending charge, a notification from your bank. And for a fraction of a second before anything else happens, you feel something. Not quite anxiety, not quite relief. Something quieter than both. Something like surveillance. You get coffee. You open an app to pay for it. The app remembers your order. The app rewards you for your loyalty. The app gently nudges you toward a slightly larger size for 30 cents more. You say yes, not because you thought about it, but because the decision was already half made by the time the question appeared. At some point during the day, someone asks if you want to put something on credit. You hesitate for a moment. You think, I'll pay it off this month. You have thought this before. Sometimes it was true. Sometimes the month ended before the intention did. But that's fine, because next month you'll be more careful. In the evening, you check your account again. The number is slightly different from what you expected. There's a charge you'd forgotten, a subscription you meant to cancel, a fee that appeared without announcement. You make a mental note to deal with it. You don't deal with it, not because you're irresponsible, but because the friction of dealing with it is just large enough and the urgency just small enough that it slides to tomorrow. And tomorrow is always willing to receive what today couldn't hold. This is not a story about weakness. This is a story about design. Every friction point in that day, every small yes, every deferred decision was anticipated. The system was not surprised by any of it. The system was counting on exactly this. Here is something worth slowing down for. Every financial behavior that feels normal, every habit that feels like your own personal relationship with money has a psychological architecture underneath it. And if you look carefully at that architecture, you begin to notice that it was not built by you. Take the act of checking your balance. It feels like responsibility. It feels like awareness. It is, in theory, what financially mature adults do. But look at what actually happens in the body when you check. There is a moment of anticipation before the number appears, a small, almost imperceptible tension, and then, depending on what you see, either a brief release or a brief contraction. This cycle, anticipation, reveal, emotional response, is not incidental. It is structurally identical to the mechanism used by every engagement system designed to hold attention. The bank did not invent the dopamine loop, but the bank lives inside it. Take the feeling of getting approved for something, a loan, a credit limit increase, a new card. In the moment of approval, most people feel a version of relief, even pride, even a sense of being seen as trustworthy. But what just happened financially is not what happened emotionally. Financially, you have taken on an obligation. Emotionally, you have received a reward.
The bank understands this gap more precisely than almost anyone because the bank profits from it. Take this subscription, the monthly charge small enough to ignore but large enough in aggregate to matter. The psychology of the subscription is built on a single insight. People are far more willing to pay a small amount repeatedly than a large amount once, and they are even more willing when the cancellation requires effort. Every subscription you've kept past its usefulness was not a failure of your memory, it was a success of a design that made remembering not quite worth the friction of acting. None of this is accusation, it is observation. The emotional mechanics of money have been studied with extraordinary precision, and you have been living inside those mechanics for as long as you have had a wallet. The modern banking system is not designed to make you wealthy. It is designed to remain necessary to you while you pursue wealth on your own. This distinction sounds subtle, but its implications reach into almost every financial decision you make. Consider how credit scores work. The score is presented as a measure of your financial health, a number that tells lenders how trustworthy you are. But look at what actually generates a high score. It is not having money, it is the consistent long-term use of debt. Someone who has never borrowed anything, who has lived within their means for decades, who has never missed a payment because they never had a payment to miss, that person may have a lower credit score than someone who has been in debt, responsibly, for years. The system rewards participation in the system, not freedom from it. Consider the structure of a standard loan repayment. In the early months and years, the vast majority of each payment goes toward interest, not principal, not toward the thing you borrowed the money to own, but toward the cost of borrowing it. Most people understand this in the abstract, but very few people feel it with precision. Because the payment amount stays the same, the calendar keeps moving, and the math remains quietly in the background. This is not an accident. Complexity that goes unexamined is a form of invisibility, and invisibility serves the lender. Consider the minimum payment, that small, manageable number printed clearly on the statement. It is not designed to help you pay down debt. It is designed to keep you in debt for as long as possible while maintaining the impression that you are responsibly managing it. The minimum payment is one of the most elegant financial instruments ever created because it transforms a creditor into someone who appears to be offering flexibility while extending the duration of the relationship indefinitely. The system does not need you to be irresponsible. In fact, irresponsibility is inefficient. The ideal participant in the financial system is someone who is responsible enough to keep making payments indefinitely, but not quite free enough to stop needing to borrow. The system is not hostile to you. It is simply calibrated to sustain itself, and sustaining itself requires your ongoing participation. Debt is not a moral failure. It is a product. It is sold with the same care, the same targeting, the same research into human psychology that goes into selling anything else. The interest rate is not a punishment, it is a price, and the price was set based on exactly how much you are likely to pay before you stop or before you can't. Financial anxiety, that low-level, persistent worry about money that millions of people carry without naming it, is not an individual pathology. It is a predictable output of a system that profits from the gap between what you have and what you feel you need. The anxiety keeps you in motion, working, spending, borrowing, managing. It rarely resolves into stillness, because stillness is not what the system is designed to produce. Something shifts when you begin to see the system clearly. It is not a dramatic shift. It does not feel like revelation. It feels more like your eyes adjusting in a room that has been slightly dim for so long that you stopped noticing. And then, quietly, the light changes, and you see the furniture, and you recognize it, and you realize it has always been exactly where it is.
You start to notice the language. Every bank advertisement is built around a promise of freedom. Freedom to buy now, freedom to travel, freedom to live the way you want. But the mechanism being sold is always an instrument of obligation. The word freedom appears where the word debt would more accurately belong. This is not cynicism. It is the recognition of a consistent pattern. Freedom is the emotional currency in which financial products are sold, because freedom is what debt, structurally, makes less available. You start to notice the feeling of spending, how certain purchases produce a sensation that resembles satisfaction but evaporates differently. How buying something you didn't need but wanted very suddenly feels less like pleasure the moment it's in your hands than it did in the moment before. This is not a character flaw. This is the gap between the anticipatory dopamine response, which the marketing was designed to trigger, and the quieter reality of ownership, which no advertisement can sustain. You start to notice the invisible minimum, that baseline of expenses below which your life, as currently constructed, cannot function. The rent, the car, the subscriptions, the insurance, the debt service. Add these together and you find a number, a floor, and that floor determines how much of your income is already allocated before you make a single decision. Most people carry this floor without ever calculating it precisely, because the calculation, once made, would require sitting with a discomfort that is easier to defer. And you start to notice something about lifestyle inflation, how the standard of living tends to expand in close proportion to income, how each raise is absorbed by a slightly newer car, a slightly newer habit, so that the gap between income and freedom stays roughly constant no matter what the income does. This is not weakness. This is conditioning. The gentle, persistent training of a consumer culture that has studied your spending patterns with more precision than you have ever applied them to yourself. When you see these things clearly, something interesting happens. You don't necessarily change everything immediately. You don't feel rage or betrayal or the need to announce anything. You feel something quieter, a kind of calm detachment, as if the screen has become slightly more transparent and you can see for the first time both the image on the screen and the mechanism projecting it simultaneously without having to choose between them. This is not liberation. Liberation is a word that promises too much. This is simply awareness, and awareness, unlike motivation, doesn't require maintenance. Once you have genuinely seen something, you cannot unsee it. You can ignore it, you can act against it, but you cannot return to not knowing that it is there. The system is not broken. This is perhaps the most important thing to hold clearly. It is working exactly as designed. It is producing the outcomes it was built to produce, which are not your outcomes, but outcomes that make your participation, your labor, your anxiety, your aspiration into something that sustains a machine that existed before you and will continue after you. This is not cause for despair. It is cause for clarity, because despair is a response to something unexpected, and there is nothing unexpected here once you have seen it. The people who manage money most quietly, who accumulate without announcing it, who exit debt without drama, who build something durable without a transformation story to sell, they tend to share one quality, not discipline exactly, not intelligence, something more like the refusal to be emotionally managed. They feel what they feel, They spend what they spend, but they do it with a small, persistent awareness that the emotional weather around money is not neutral, that it has been arranged, and that they are allowed to notice the arrangement without being swept away by it. Financial collapse does not begin in crisis. It begins in the ordinary, in the small decision that felt fine, in the subscription that barely registered, in the loan that felt like help, in the raise that disappeared without a trace, in the anxiety that persisted long after the account balance gave it no reason to. And the beginning of something else, something quieter and more durable, does not begin in a dramatic commitment, or a 5-step plan, or a morning you decide everything changes. It begins in a moment exactly like this one, when something you had always felt but never named becomes briefly visible, and you choose to look at it, without flinching and without rushing to make it into something more comfortable than it actually is. That is enough for now. That is more than enough. If you stayed with this for the full length of it, thank you, genuinely. That kind of patience with a slow idea is becoming rare, and it is not something to take for granted. If something in the last 30 minutes sat differently than you expected, if a thought is still moving somewhere in the back of your mind, I'd be glad to read it in the comments, not as a debate, not as a lesson, just as the continuation of a conversation that is worth having slowly. And if you want to be here when the next observation arrives, the subscribe button is there, quietly, with no pressure. The same way the best financial decisions tend to happen, without urgency, without drama, without anyone telling you that time is running out. Take care of yourself, and take care with the systems you live inside.